Hi and welcome to the early bird. And apologies for Friday. We had just up to put a bit more RAM in our server, so we've doubled the speed of our of our website. So, but all that's working fine now. Okay, on to the Dow Jones here. Everything's pretty much going according to plan. We feel that there is a top in place, and the current target of the Dow Jones here moving down to around the 12,000 here is kind of what we expected, and now we expect a rally to come in the anywhere from 38.2% to really up to 70, say 70 odd 5%. But I think that the between the 50 and the 60 here would be the standard issue of the rally. The 12,200 is the sort of area where the first sort of or second area of supply comes in, so that's going to create a lot of resistance. If that became support on 12,200, then we'd kind of be thinking that there is support in the market, and we would take that from there. There would still be chance of failure further up, up in this little area up here. But we'd need to sort of switch over there but into a bit more of a bullish thing. But also this 12,100 here, this would likely be tested again for support here. So what we're really looking for here, we're looking for some sort of like A, B and C wave coming up through here. And this is going to create a pretty much sort of positive outlook for Monday, Tuesday, Wednesday, I'd imagine. I mean, one of those days will be down. But yeah, so generally speaking, early in the week to midweek, we will be reasonably positive within the market. So that's good for short term. Any medium term traders would have to accommodate this situation and basically wait for this particular pattern to come in here, this three-wave rally here, as a corrective rally, because once this is finished, then we'd expect these lows here to be taken out. So we've got a five-wave sequence down to here, three-wave sequence back to here, and then we'll be looking for another five to go down, which will take us down to around the 11,500 mark. So we'll see how we go. We'll just trade level by level, and at this stage here we can say that generally speaking for most indices that they will be positive for till the midpoint of the week, and we just need to be a bit careful after that. So yeah, so the S&P 500 is the same as well. We've been looking at this move coming down through here. The 61.8 retracement level is around the 13245 mark then. But also through here as well, you'll see that this area through here at that 1324.25 there is a really strong, well, it's quite a strong sort of supply area, if you will. So this racing back up to here is where the resistance starts. So the resistance is between the 1324 there, and we could say the 1334 here, which will give us a 76% Fibonacci retracement level. So we'd sort of expect some sort of three-wave structure within there, and that can take 2 or 3 days to unfold as well. So we'll see how that goes. If we've made a mistake, then these areas here that were resistance at this area, this block here really, if that block there became support over there, have no problems in going long again from that point there. But in the meantime, because of the wave structure coming to the downside, we'll consider this a counter trend rally that would last to midweek, and then we'll be looking at shorting it from that point. Would be wrong if this area here, this block area, found support over in this area here, and this goes through to the copper market as well, being at 450, which we'll have a look at shortly as well. The FTSE here is much the same in the same context, but I can only really see three waves down here. Now on the FTSE 100, this was the high here. On the FTSE 250, that was the high over here. So just trying to sort of figure that out a little bit, but there's more of a three-wave structure through here in terms of 5 waves down for one, back for 2, and then down for 3 here. So this is more like an A and a B and a C wave, and we were looking for this to develop into 5 waves, but we didn't really get it. So this could certainly be a corrective pattern here. The main structure of this market here would be the 5,800. In the bigger picture on the daily chart, you'd see that if the market moved under the 5.8, then a bigger bearish picture would evolve from there. But as long as the market stays at 5.8 here as support, then all of this here and all what we've been experiencing over the past month or so is all working at a positive move at the 6,000 there. So once again, this will be the line in the sand. So we've got 2 or 3 days of being positive on our local market and the Dow, I suppose, maybe 2. But we'll see. Just give this time to work out if it's going to give us support or resistance, and then we'll take our trade from there. So a little bit of patience. Timing really is what we're talking about here, is a little bit of patience to get the timing right. And the same with our local market as well. This is the SPY here. So the good old 4772 here has come in as a good support area, and also the structure coming down to the downside as well. So we'll also be looking for the 50-60 retracement level up here, but even further back up here as well. So we'll see how we go with that. The cash market here, the XJO here, this is pretty much, so we're looking for this sort of structure coming to the downside. What interests me on the upside here is that from this little point here, when the cash market opens, it will be driven up. So we'll end up being up, let's just say, into this zone here. That should be 472, that's up there. That makes a bit more sense. So it would be up there somewhere. So we're looking for 5 waves up, and as you can see at the moment, we've got up for 1 and back for 2, a strong third wave going up, the 4th wave and the 5th wave will come up to here. So we'll see some sort of A, B and C here. Highly likely we'll get that 5 wave structure come into play there. And if that's the case, if we get 5 waves there, that means that we'll get another 5 waves over here after this counter trend here. So we could go Monday, we could go Tuesday, and then we could go Wednesday with a bit of a zigzag and closing higher. Okay, so that's what would be sort of working through there. That's the general, that's probably the clearest pattern I can sort of see there. So yeah, Monday up, Tuesday profit taking, Wednesday a bit of a zigzag but closing higher here. So we'll get 5 here, and we'll get another 5 over here. So really it's a retest of the 4-9 there as such, the largest number. But this group 2 here will should come into play as well. Alrighty, the drivers of this market here, we've got sort of the main, well, there's obviously more, but ones I like looking at here. This is crude and Western Texas. So we can see that we've got 5 waves up through here, and we'll be looking for an A and a B and a C wave here, and then we'll see if we get support back on here. As pointed out in our charts as well, we also have to point out the fact that we may not get the A, the B and C here and then sit on here and go up through here. We may get down for wave 1 here, ABC back for wave 2 to retest there, and then come down through here as well as a wave 3. So in one way or another, we're going to get those 3 swings across there. It's just a matter of is this going to be, you know, a C wave, which is normally quite sort of lazy really. See this A wave here, see how fast that came down? A C wave would be on a more of an angle, so we'd be looking for, if the C wave came on more of an angle here, like on a 45-degree angle, then we'd know it was a C wave. If this was going to be down for 1 and back for 2 and down for 3, then we'll see it come straight down in line with this as well, so it will come down quite quickly. So the slope of this next wave here will dictate to us, it'll show us the personality, which will show us that would it be going up from there or going down from there. Because the third wave, if that was the third wave coming down, it would be longer than this wave 1 here, add another 60-odd% on it, so it would bring it down to here somewhere. It would get a bounce off here, and if we get that 5 waves there, then we're on our way down from that point. But Yeah, one's a pretty strong number, and we'll see this market stick to that for the near term. But we expected that when mentioned it here as well. We mentioned that you'll see three swings across this market here, and it's not going anywhere for the time being. Okay, copper. Okay, copper's a bit like the Dow Jones and so forth, in terms that it's been sold off quite strongly. As you can see down here, it's a little bit sort of messy with all of this here. So what we're really sort of, just to keep it really simple here, because this is the copper's driving the base metals, not driving them all, but it's a bit of a guide stick for all of that, but also the Australian dollar as well, lifting up there. So what we're looking at here, in very simple terms, this 450 here is the line in the sand. If this becomes support, then we'll go further up. If it can't get past this, and then this becomes a resistance, then we can consider this a rally like the Dow Jones, and then we'll see it fold over from that point there. So once again, we just need a little bit of time here, a bit of patience, a bit of time to get the timing right as well. So that's what we'll be looking at there. So good strong resistance at 450 here. This is a retest of that. When a market comes up to here, it can either be sold off before it gets there, or when it gets there and comes back down. But see how it goes for support, and then we'll see how it pushes back up and retests it. Otherwise, it will go straight up through here, and if that's the case, it goes straight up through there, then normally when it comes back down, we know it's going to be a corrective pattern across this level here. But if it fails in getting here and then goes off, then it's got a chance of further failure at that point there. So we'll see how we go with all of this. So once again, we're looking for three waves to the upside, and we can see here that we've got 1, 2, 3, 4, 5 to here. So then, but this is still an A and a B and a C to here. So we've got, just doing this quickly for myself as well, 1, 2, we've got 1, 2, 3, 4, then 1, 2, 3, 4, 5 to there. So we've got a fourth, and we've still got a fifth to go up there. So that 450 should be hit. The 448 will give it some grief as well. But let's just see how we what the market delivers here. So we've got 2 or 3 days of rally in terms of the indices. So that will give this a little bit of time to sort itself out there as well. Okay, so looking at golds. Okay, golds. The US dollar is still quite weak, but it's on its lows. On one set of lows at say 77.20. So that's been a bit of a catalyst for pushing this up here, and we're looking for a corrective pattern across here. When we were here on the Thursday, we mentioned that we'll be looking at a series of fourth and fifth waves coming across here, and that's still unfolding there. We'd sort of imagine that this would be down for an A wave, a B wave up, and a C wave down for the wave 4, and then a push up from that point there. So we'll look at this closely once this market pulls in through here, and that run up there in gold there, that fifth wave there, is something that we could trade up in our local stocks, long as the general indices are in that direction as well. So that's a real sort of bit of thin ice, that one. So we'll see how we go with that. All right, well, that's pretty much it. And just to recap that somewhat here, this is what we're looking for on our markets during the week. So we're looking for positive here, negative here, which could be a day and a half here, and then a push up through here in 5 waves as a retest to the 4.9 there. We know that this area here, the 65, 72 and the 80 will cause some resistance there, and you'll need to line this up with the SPY as well. And the same, obviously, with the Dow Jones as well, with the Dow Jones there. This is a little bit messy here. I haven't pulled it apart yet. We'll need to have a look on the index itself, but essentially we're looking for an A and a B and a C wave, pulling back up 61.8%, whatever, 2,200 is the first level there. But once that's complete there, if we're correct, then we'll see further moves to the downside. And if we are correct, then this next move that comes down will come down pretty rapidly, because it would be a third wave. It would be down for one, back for two, and then down for three. It will edge down slowly, but then pick up speed down to the downside. Alrighty, well, good morning and good luck.